right, good morning. Today is Friday the 16th of January, and we're looking at the E-Mini S&P 500 futures contract. Similar to the last few days, I have bought this market as it took out the first 3-minute bar high on the E-Mini S&P 500. The market gapped down, as you can see. The market closed. Look at the market closed yesterday at 1989, opened up at 1983, so we had about a 6-point gap. So I'm looking for this market to fill, okay? So it closed at 1989. So I'm going to go 88 3/4 is going to be my first profit target for, I'm going to go 3. I'm going to look to take off 3 automatically. Look, 80. Well, here we go. We're right there right now, aren't we? So let's just go ahead. Take 3 off here. Sell 3 right there in this. Look at that. Nice.
Order fill.
Beautiful. Beautiful, beautiful, beautiful. Did exactly what I thought. Again, this is the first 4 minutes of trading. We just sold 3. We closed out $300 here, literally in the course of a minute or so. We've got 2 left, so let's change our contract size to 2. We filled the gap, and again, this trade based on rhyme and reason. The simple fact of the matter is it opened lower. There was a 6-point gap. The market was able to take out that first 3-minute bars high. That was the trigger to enter this market long. Took partial profits on the closing of that gap, and now we're sitting pretty. Okay, very pretty. Look at this. We're up $700. I am going to move a stop. I'm going to take that. I don't even have a stop in right now because it moved so darn quick. I wasn't able to put that initial stop loss in. And just to let you know, that initial stop loss, folks, was directly below the low of the day. So as soon as the market penetrated up through the high of that first 3-minute bar, my initial stop was below the low of the day. Okay, so that was the initial risk. Took profits here on partial. And look at this. Market is moving higher. It just took out the last 3-minute bar high of yesterday. So we've created an outside pattern, an engulfing pattern. On the, look at this. Look at this. This is what I like to call an expanded range vertical bar. This is the largest bar by far. If we go back, this is a huge bar. Huge momentum to the upside right now. I'm going to put my stop at 91 1/4. 91 and a sell stop at 91 1/4. Let's go do that. 91 1/4. Right there. 91 1/4, folks. Right there. Okay? Let me pause the video so it's not too long like it was yesterday. All right, that was a quick one. I've been taken out. I am flat. Look at that. That trade took less than 3 minutes. We made $700 on that trade. Not bad, right? Again, let me just quickly recap this trade. Now, again, you know in the first 10 to 20 minutes, you get a lot of activity, especially on Friday mornings. Well, this is where it closed. We gapped lower. We gapped down here. We created this first 3-minute bar range. Okay, so it opened up down in here. It took out this low from yesterday. It closed higher on the bar. My trigger was when the market penetrated up through the high, go long, so you buy it above that bar's high. The initial catastrophic stop loss was below the low. So this is, essentially this is your R, this is your risk. First target was filling that gap right there. Second, I could have sold this on strength, the momentum to the upside, but instead I took that stop and placed it, slightly below that 50. Any way you cut it, it was good for $700 so far. Okay, so hopefully that helps. We've had some really great trades this week. Of course, not every single trade are as good as what you've seen in the last few days, but you know it's possible. If you know what you're doing and you have rules and you're able to stick with your rules, there's no reason why you can't do it yourself. So if you've got any questions, post your questions on the blog and I'll be back, okay? Have a profitable day. Again, the market's only been open for 8 minutes, folks, and we took in $700. So the day is still young. Let's make some more. Have a good one. Bye for now.